Good afternoon, everyone. Welcome along to our regular Friday session, 12 o'clock. We're expecting a lot of people today. Well over 100 have signed in. So if you could just bear with us, we will be with you in a moment or two as we allow people to enter the session. We've also got one of our panelists who's having trouble with his camera. So he's going to sign out and sign in again. So just bear with us. We'll be with you in a minute or two. Thank you. In the meantime, Abraham, you might like to put the code up for the Slido today. We are using Slido, which Howard will tell you about shortly. There we are. It's actually on the screen. So while you're waiting, ladies and gents, if you'd like to go to slido.com, hashtag LM050321, and there is a poll on there, which you can start filling in. And that's also where we're going to ask you to put your questions. But for the meantime, perhaps you'd just like to say hi, put your name, your organisation and where you're from in the chat box. And that will give our speakers an indication to see the type of audience that we're speaking to today. So thank you for that. Just give us a little bit longer. We're just waiting for a few more people to come. We're about halfway there, I think. I expect if you're like me, you tend to slide in at the last moment because you go from one Zoom meeting to another or one Teams to another. So we'll just give it another 60 seconds, I think, folks, and then we'll make a start because we've got a busy hour and a very important subject to discuss today. So just say hi if you're with us in the chat box. Lydia Mills is in from Medical Architecture. Hello, Lydia. Andrew Pierce, Commercial Manager of Midas. Hello, Andrew. Ian Flower, Engineers for Overseas Development Limited. Alistair Carswell, hello to you from Ferguson Mann Architects. So good to see that we've got a good spread of people in again today from across the UK. So also we've got Andy Sygrove from BAM Nuttall, Madison Turvey from Development Exec. So hello to you, Chris from Colmert, Robert Hunt from Steve Hunt Partnership in Warrington. Yes, we are truly across the whole of the UK today. I think what I'm going to do now, ladies and gentlemen, is we will make a start because it is a couple of minutes after 12. So good afternoon, everyone. Officially welcome to this regular Friday lunchtime webinar that we've been now providing for almost 12 months. I'm Andrew Carpenter. I am Chief Executive of the Structural Timber Association and also Constructing Excellence in the Southwest and in the Midlands. And I'm joined by all my CE colleagues across the UK now, in the Northeast, the Northwest, Leeds and Humber, in Wales, in London and the Southeast, and indeed nationally. I'm also joined by the CIOB in the Southwest. So there's 10 organisations now that are working together to bring you these Friday sessions. I will be letting you know later on of the CPD certificate code, but we tend to give that out at the end so that we make sure people stick with us. Anyway, today we're talking about the very important subject matter of managing insurable risks in the construction sector. Before I introduce our eminent speakers, I'm going to hand over to Howard, who's going to go through the house rules. Thanks, Howard.
Thank you, Andrew. Good morning or good afternoon to everyone. I'm just going to take you through Slido. So for those of you who have not used it before, there are two ways that you can get into Slido. You'll find on the bottom right-hand side of the screen, there is a QR. You can use your QR reader on your phone for that. Or if you wish to go in, you can go another way. You can go to slido.com, that's SLIDO.com, and put in hashtag LM050321. which is, of course, today's date. So I'd ask if you could go in, because what we're going to do is we're going to run the poll now. It's not very long, but we're going to have an opening poll, which we'll give the answers to later on in the session. If you have any questions today, please do use the Q&A menu on Slido. If you like a question that someone asks, you can vote for it. That will put it up the priority list for being asked and answered. And we will have a feedback poll at the end, which we would appreciate your feedback on. And it does ask from Gallagher's point of view what other presentations you may like from them. So let's put up the poll and we'll quickly go through it. Now, some of you have already sped straight in, which is great. It would be super if we could get up to about 40 people doing the poll today. So the first question for those of you just want to see it on the screen. It's a simple yes or no. Are you feeling the effects of a hardening insurance market? And the second question, please, Abraham. If you are experiencing this, in what way are you experiencing the hardening insurance market? So that might be, I'm not leading the questions here, but paying more in terms of insurance costs, finding exclusions or whatever. Now, those two questions will be answered by our two people from Gallagher later on. So I'm now going to pass back to Andrew.
Thanks, Howard, very much. Okay, on with an eagerly awaited webinar today. Gallagher's are very active members of both the Structural Timber Association and Constructing Excellence. So I'm delighted today to welcome Marcus Saunders and Greg Spiteri, who are each going to be giving a presentation on managing insurable risks. And then, as I say, at the end, we will have a Q&A session. So if you have got any questions that crop up during the presentations, or indeed outside of the presentation that you want answering, please use the code, the slido.com code that Howard's just talked about, and then we'll have a time at the end to go through that. But for the meantime, Marcus, I believe you're starting, so over to you, sir.
Thank you very much. Good morning, everybody. Sorry, I don't think my video's working, so I dressed up all smart, ready for you all, and what a waste of time that was, eh? Never mind. So if we get the first slide, Abraham, that'd be great. Okay. Right, so my name's Marcus Saunders. I'm an account exec at Gallagher. I've dealt with construction insurance now for 40 years. Luckily, you can't see me, so you can't see how it's aged me. Next slide, please. Okay. So a bit of background to where we're at. Construction professional indemnity market. So the insurance market has been soft now for 30 years. So 17 years ago, the market tried to harden, but it failed as we were going into a recession. Now, although you guys won't think this, we have all been used to cheap premiums, easy access to the market, a market that was buoyant, with plenty of insurers, plenty of appetite, and plenty of capacity to write new business and to carry out renewals. Things were great. The insurance market was offering covers on an any one claim basis, which meant if you had a £1 million limit of indemnity cover, you could make a £1 million claim against your policy one week and a £1 million claim against you your next week. This was starting to really be in favour of the construction industry. So what happened to change this? Obviously, the Grenfell Tower catastrophe in 2017 had a major impact, not only with the people's lives involved that were lost, injured, but the knock-on effect to the country, the construction of buildings, performance of buildings, materials used within those buildings, like it got pretty down on that year. Dame Judith Hackett was appointed by the government to investigate into the affair, and the resultant inquiry has opened up not only the eyes of the government, the eyes of the construction sector, and the eyes of insurance companies. Insurers have started to look at their construction book. They wanted to see what they were insuring currently on the construction sector, and they realised that their exposure to losses and similar losses to Grenfell was high. Insurers were absolutely nervous as anything, worried about the 450 other buildings that have been constructed in the same way as Grenfell. Next slide, please, Abraham. So, pressure building on the professional indemnity insurers started to mount. Cladding in tower blocks across the construction industry opened underwriters' eyes to the scale of the problem. You guys were working with narrow margins in construction and have been for some time, and you were starting to see contractual disputes with your supply chain leading to increasing costs and costs higher raising on the professional indemnity claims. There are a lot of contracts in place, and there was a lot of onerous contract terms leading to, again, a more litigious culture and spiraling costs, which doesn't help anybody. So professional indemnity has become one of the worst performing classes of insurance in the Lloyd's market. This was a major factor into insurers starting to consider increasing rates. The problem with professional indemnity claims in particular, they have a long time in progress due to data being collected, solicitors involved with regards to the litigious element, and obviously as time goes on, you've got inflation to consider when settling a claim. So the potential costs of Grenfell are likely to be in excess of £1 billion, and prior to this, the PI market was already losing 435 million a year. This was a figure accurate in 2018. Lloyd's of London decided they need to carry out a review of their syndicates to understand the solvency of their members. Next slide, please. So, collapsing capacity, here we go. So on the right-hand side, you can see a list of syndicates that were involved in PI prior to the changes, and these were all pulled out of the market of design and construct, which is the construction PI element. A couple of those insurers actually went into liquidation. So what does capacity mean? Because this is key here. This is dealt with in two ways. Firstly, there is a capacity to write the class of business, i.e. construction sector, and their design and construct policies. Secondly, the capacity to write individual risks, such as Joe Blogg's construction, Andrew Carpenter's plant hire limited. Their PI exposure and risk is there. Therefore, the capacity had to reduce because of these numbers shrinking. There was a smaller number of insurers involved. They were asking that they need to get value for their risk that they're taking on, and rates had to increase. Another thing to consider, guys, is that insurers may also cover other companies in that supply chain on the same contract, which again increases the insurer's exposure should a loss occur on that contract. Next slide, please. So here we go. What does the hardening professional indemnity market look like? Insurers are looking to exclude certain risks and cover. So cladding risks as a result of Grenfell were particularly not very popular. Combustible materials, because of what Dame Judith Hackett have said in a report, were also out of favour. Both these elements are now going to be extremely highly rated when insurance is being requested. The rates attached to them are going to be either doable or not doable if and when an insurer quotes for those types of risks. Design and construct is now written on an aggregate basis. This allows insurers to better manage their exposure, and they are now happier that they are reducing their cover to in the aggregate. Now, what does aggregate mean? Aggregate means the total amount claimable in 1 year. So if you had a 1 million limit of indemnity on your professional indemnity policy, and you had one major loss up to £1 million, that is your total risk indemnity gone in one go. Therefore, you would need to buy additional covers to keep the insurance going and compliant with your contract. Insurers now, on large contracts, are starting to restrict their cover to no more than 2 million, particularly on major contracts. And there are times that ourselves at Gallagher are asking insurers to get top-up policies to follow on that first policy if a higher limit of indemnity is required by the main contractor or the employer. Next slide, please. So here we go. What's the impact? We're starting to see unaffordable covers. We've got not only to consider construction guys, but also other aspects as well. The availability for professional indemnity at an affordable level for subcontractors as well, because obviously if they cannot comply with your contracts because they've got no PI cover, they're not going to assist you in your protection. So we at Gallagher's are starting to get excess layers for topping up PI to ensure that you're complying with your contracts, as well as cladding. Other areas that are now in particular concern within the construction sector are as listed below. So civil engineering, groundworks and piling, renewable energy. These are the types of sectors that we see a volume of claims coming in. Rail and nuclear, however, are more catastrophe type risks, and they could easily eat up the limit of indemnity in one go. This is something you need to be aware of and consider when you're thinking about your insurance renewal and your policy. We at Gallagher's have specialisms in both these areas. Can I have the next slide, please? Okay, so how can Gallagher help? How can we help you get the best deal? We are looking to always insist on getting the best cover and at the best price for all our clients. Gallagher took a view that we must start the renewal and new business process earlier than ever before. We now try and get the ball rolling probably 6 to 8 weeks as a minimum before the renewal date. When preparing for renewal, insurers now want to see the ins and outs of an you know what, to understand the full risk details being sent. So such as a completed proposal form, which needs to give the maximum detail to the insurer to understand the risk. Also, insurers are now looking at the background to businesses. What's their strategy moving forward? This last 12 months has been hell with COVID-19. Insurers are now starting to think, okay, they've all gone through a tough time. What's the financial expenditure? Is there solvency issues? So there are actually some insurers are now actually requesting financials, such as forecasts and budgets, showing the business direction moving forward. In addition to all this, insurers want to know good corporate governance in place, good risk management procedures, health and safety, RAMs, which is your risk assessments, method statements, etc. Right. Next slide, please. Interesting situation if you have a cladding exposure. At the moment, insurers are really concerned about this area. They want to know that the cladding that you are using are not combustible. There are many exclusions on PI policy for cladding combustibility. What we can do to get around that is to make sure that the cladding used or you are working with is BBA fire tested or BS 8414 approved. In addition to this, for the cladding guys, insurers are now asking for additional construction forms to be completed in more detail regarding cladding, basements, and swimming pools. We at Gallagher's also would like to help produce claims history documents showing you in the best light as possible. We would highlight a document that shows details of all claims over the last 10 years, along with current status such as whether a claim was open, a claim is closed. If it's open, what is the reserve against that claim? If it's closed, what payments have been made? It is crucial that you review this information from now on every renewal to ensure that we can get the best deal as your broker, etc. So just to summarize everything, I've been working with Structural Timber Association and Constructing Excellence as their insurance partner for over 10 years. I am becoming a contractor snob. I like ones that operate best practice, they mitigate their losses, and ones that pay. Thank you.
Thanks, Marcus. Are we going straight over to you, Greg, now?
Yep, absolutely, Andrew. So we can move forward with slides. So yeah, thank you, Marcus, and thank you, Andrew and Howard. Delighted to be with you today and walk through some of the issues of the residential investment market from an insurance point of view. For my side, I've been working in the industry for over 30 years. I'm based in London with our in our Gallagher real estate team. So I come at this from the completed investment point of view. I work with many landlords, managing agents, and developers in the sector. And I guess what I'm going to cover today is kind of in three parts. A whistle stop, lot to cover, and I'm sure there's a lot more questions that may come out of it. Touch on the background. I won't repeat what Marcus has said, but obviously there's similarities to what we see. Some of the key issues with some of the regulatory requirements in the Hackett report, etc., and talk about EWS. And the insurance market and both the challenges of today and what the future might look like, and how similarly that we can assist that process with some pretty unprecedented challenges that we're seeing in the market. So yeah, Abraham, if you could move on slide, please. Again, probably don't need a reminder, but I think it's always good to reflect. This image is quite a chilling one. I'm sure we'd all agree, with the events of 2017 that have shaped and marked quite a bit of what we're now doing, certainly in the building safety arena and risk management, and of course within placement. 72 deaths. So this 24-story building comprised of aluminium composite panels and polyethylene filler and foam insulation. So this incident obviously triggered a series of events and led to a big review on high-rise residential, including regulatory systems, compliance, and of course anything that's been learnt from international experience on similar sites. So yeah, I'm going to talk a bit about those today. So yeah, if we can move on to the next slide. So a bit more background here. In December 2017, following the incident, the Hackett report, Dame Judith Hackett was asked to review the whole system, and I put at the bottom there the current system had clearly failed and needed reform. Several areas came into play, but I've put 6 sort of what I consider the main areas of focus around regulation, clear roles and responsibility on fire safety, improving levels of competence, processes, compliance and enforcement, and a clear voice for residents, as well as a review of testing. So clearly there was a lot to be gone through, and some of those are clearly still in play today. Yeah, if we move forward to the next slide. So firstly, I'm going to have a look at funding, because clearly this is going to cost a lot of money. I'm sure you'll all appreciate. And I've put down three key dates here. So in May 2019 was the sort of first tranche of funding that the government provided for ACM panel removal, 600 million for buildings over 18 metres. Then that developed through to the March 2020, where there was a further announcement of £1 billion of funding for non-ACM cladding, and I'll talk a little bit about a couple of different types later. But clearly, ACM is only the tip of the iceberg, and again, I've got some high-level stats on some of the exposure for non-ACM, which probably gives a real indication of the size of the problem. We're certainly seeing that in the market through the insurance placement side that we deal with on a day-to-day basis. And most recently, on the 10th of February, a recent announcement of £3.5 billion worth of injection into the Building Safety Fund that obviously is growing that capability for remediation. But of course, this is only for cladding. This doesn't cover internal insulation or cavity breaks, and is it enough? And clearly, I don't think it's going to be. Next slide, please, Abraham. So just wanted to touch on EWS. I'm sure you're all familiar with the terminology, external wall surveys. You know, an assessment of the external wall system that will establish if remediation is required, and obviously needs to be completed by a suitably competent individual. Now, this came about in 2019, December, as driven by the Royal Institute of Chartered Surveyors, and is commonly known as the EWS1 form. And this was aimed at restoring confidence in the lending sector for compromised buildings or potentially compromised buildings over 18 metres. And there clearly has been some teething problems with it, and how they're viewed, and will certainly be impacted by things like professional indemnity insurance, as well as other factors. Next slide, please. So there are some challenges with this. I think there's been an overall lack of clarity, perhaps, over what is actually in scope, and the government moved to clarify that in January 2020. And whilst it is definitely aimed at buildings over 18 metres, it's been extended, if you like, to include any building that has a specific concerns. And we've certainly seen buildings below 18 metres that have similar issues, be it with cladding or balconies or insulation, which is arguably as big a problem as the cladding itself. And as part of the Hackett review and any subsequent reviews, the government is looking at alternative ways of developing this process. Next slide, please. So some final challenges really have been around the supply of professional qualified personnel. Clearly, it's a kind of large influx of requirement, and it's definitely outstripped supply. Surveys are expensive, and costs are passed on to leaseholders. And I will touch on. I do a lot of work in the leaseholder world, and clearly there's been a massive impact, well documented, virtually on every news item you see, with cladding reports and the effects of leaseholders. And then there's the knock-on effect of delay in mortgages or remortgages due to what might be a backlog or just slow calls to action. And at this stage, these are not a statutory requirement of the building owner. The other thing I would say before we move on from this is that insurers view these with slight trepidation. Obviously, we see quite a lot of these fall on our desks from our clients on a weekly and monthly basis. And as I'll touch on later, there is a duty of disclosure that we have as a regulated entity to tell insurers as soon as we're made aware of the situation. But the surveys actually relatively evaluate a small proportion of the building, and the insurance companies would hold much more stock in the fire report as opposed to the EWS. So sometimes the EWS is a trigger to work out what's happening. Next slide, please. So I'm quite keen on statistics, just to kind of paint the picture. So the impacts of Grenfell were this brought into scope, I suppose, around 462 buildings, that were over 18 metres with ACM exposure. And at the moment, as of I think this is December perhaps, 417 have either been remediated or started. The initial target date was June 2020, but this has since been moved to the end of this year, probably down to delays in remediation, and of course COVID has put pay to quite a lot of delay during the course of 2020. And I think we roughly think there's about 297 buildings that have been fully remediated up until the end of last year. Next slide, please. So there's definitely been a pattern of, I think local authority buildings are definitely probably moved faster than the private sector. And I think at this stage, there's been about roughly 89 private sector buildings remediated for one reason or another. So that is starting to climb, but it's probably only just over 50–60% of the total at this stage. But that's obviously only relating to ACM, but non-ACM, which we see, as a really big problem with the general stock in our clients' portfolios, is you can see here, total applications of 2,820 to that non-ACM fund as of January this year. So that would suggest to me there's an awful lot of stock out there with problems, and of course this is being borne out in some of the insurance terms that are being provided to these portfolios and properties. And of course, it's £1 billion, but there's the potential costs. I'm sure there's lots of different things we've all read about the potential costs, but I've seen 15 billion, 20 billion mentioned. So a massive issue that the industry is going to face. Next slide, please. Again, yeah, a couple of types of cladding, and these are things that we see. Obviously composite panels and high pressure laminate are commonplace, but the issues for the insurance market particularly is the high combustibility. I think Marcus touched on that. Obviously these are a few of those main ones that are considered particularly onerous with EPS, PUR and PIR. And it's fair to say that there's little or no appetite for in the property owners market, insurance market, for these type of risks, and there is a slight disconnect developing with B-rated buildings. So even some of the remediation perhaps doesn't totally clear the building of EPS and such like, and there's sometimes a tendency to encapsulate perhaps, and that provides us with a huge challenge when seeking capacity from the market. So you'll either have huge increases or reductions in limits. So again, a real problem for the marketplace at the moment in the current conditions. Next slide, please. So I'm just going to touch on those the resident for a second here, because this is, as I say, only the funding in place, and any remediation is for cladding, and there's clearly some huge costs to bear here, but there's also things like waking watch that may be required by the fire service, and those costs can be, I've seen £12,000 to £45,000 a week, depending on the extent and size of the development. There may be some requirements to increase fire precautions, such as sprinklers and alarms and so forth, which again are being borne by the service charge. And obviously the increased costs that are being experienced, huge spiralling costs, as we've all experienced. Plus there's limited coverage, perhaps increases in excesses, particularly the fire excess if it's a challenge risk, and I suppose the ultimate risk is being left with an asset that's has little or no value, which again is not an ideal position to be in. Next slide, please. Thank you. I just want to also touch on the ABI, the Association of British Insurers. There's been a lot of criticism levied at the insurance industry over this issue, but the ABI have made their position clear, and we're involved in, or certainly an observer of all items leasehold reform and the issues of the day. And the ABI's view is very much that this is a regulatory issue for the building sector. It does require urgent action, but the insurance market is still functioning normally, albeit in a hard market condition. But it's always has been and always will be risk reflective, and they would argue strongly that they're reflecting the risk and the vulnerability of their capacity when assessing risk. Premium increases are obviously inevitable, and PI is obviously a massive factor within the market. Next slide, please. So starting to sum up, cladding is probably only the tip of the iceberg, and with the advent of COVID as well, there's huge calls on the insurers in terms of costs. But I've put this slide together in terms of just sort of bringing it together under what we call the perfect storm, and I'll rush and race through these a little bit. But what you've got here is several factors that contribute to the hard market that we're experiencing at the moment. And some would say, and I'm certainly one of those, that this has been coming for a little while now. In 2016, insurers contending with Solvency II and much more stringent requirements on their reserving, so more capital to be deployed within their reserving strategies required by the legislation. Premium rates have been soft for probably over 20 years, so those rates are hardening due to the insurers looking at their strategy, their pricing, the risks at play, and when we've seen some retreating from the market in certain areas, which obviously reduces the capacity available. Environmental impacts, of natural catastrophe and disasters and issues like, Kira and Storm Dennis last year cost the industry £360 million alone. And there's flood, earthquake, windstorm, wildfires, cyber, and of course, very much COVID being the icing on the cake, I suppose, in some respects. And then what we sometimes forget about in times like this is the BAU claims. So business as usual, fire damage, escape of water, which costs the industry 1.8 million a day, accidental damage, and strike and riot, civil commotion issues. Moving through to fraud, which again costs the industry probably in excess of £1.3 billion a year. It starts to add up, I'm sure you can see. And then reinsurance costs, which has been a big driver for this is the insurance companies purchasing of their own insurance, I guess, where we've seen treaty costs and what is known as facultative reinsurance. So where you've got a highly combustible building, for example, where you need to buy extra reinsurance, those costs have gone very much through the roof this year and last year and before. If they can purchase it at all. And then I suppose the final two things around, there's been very little or no investment income whilst interest rates have been so low, and therefore insurers have had a big focus on profitability, which they're driving much harder for in the current state of the market. So hopefully that's quite clear around what we mean by the perfect storm. So next slide, please. So this is very similar to what Mark has put up, but these are sort of more focused around the real estate investment side that I work on, and I would totally agree with early submission being absolutely key, and we are really starting that process probably 3 months out for those type of certainly the larger portfolios in terms of putting a strategy together. Priorities for us are to maintain full cover, quite simply. and make good use of the insurer capacity. I've never seen more in certainly my 30-year career so much use of the excess layer market due to capacity issues. So that is definitely more prevalent. Quality of submission, absolutely key. Insurers are inundated, so therefore if the submission isn't good and detailed and understood, it's quite often not going to be high up on their priority list. So again, that is absolutely crucial, as well as disclosure of facts. Next slide, please. And as I say, if I talked about EPS earlier, the holding market for your program is vital. That with the lack of appetite for new business, particularly with anything where there is a cladding or compromised fire risk, is non-existent. So therefore, working with your holding insurer is absolutely vital, and as well as the remediation plan for those risks is going to be absolutely fundamental to success or failure, and having a really good key well thought out strategy, and working with if it's more than one partner, working with all those partners to make sure that that's secured. And one thing that's often missed is the communication piece, and we've certainly in Gallagher worked incredibly hard over the last 18 months to make sure we're communicating really strongly with all key stakeholders, and to make sure that they were aware of plans and what lies ahead, because often there's some pretty challenging news to be delivered, especially around premium and coverage. So again, we think all those things added together doesn't necessarily guarantee success, but it certainly does help your cause and avoid, I suppose, not achieving what you want to achieve in the long run. So I think that's pretty much it from me. So yeah, I think we're at the end. So just want to say thank you, and I think we're ready for questions.
Thank you, Greg, very much. If you could stop sharing the screen then, Abraham. Shall we just pop up the results of the survey that we held at the beginning of the session as a starter for 10, and then we'll go into the questions. I've noticed on Slido.com at the moment there's only 2 questions, and that's both been asked by me. So it would be quite nice if someone else in the audience would kindly pop some questions in Slido.
There are more there, Andrew.
Okay, jolly good. I haven't looked for a while. Can we just have the survey results up then first? So are you feeling the effects of the hardening insurance market? This should be interesting. Not. No surprise there. 3/4 of our audience are experiencing a hardening. I don't think that's any surprise, Greg or Marcus, is it? But I think what we could do is let's have a drill down at the next question and see some of the reasons, so to speak, some of the specifics. So, Greg, Marcus, would you like to pick up some of these comments and maybe make a comment yourself?
Okay. Yeah, I mean, that's pretty much what I've said in my talk, isn't it, really? Unfortunately, it is the cladding and the fire risk is definitely at the forefront of insurers at the moment. So we've done things to educate them by holding round tables and stuff like that to explain the mitigating circumstances that our clients are putting into to prevent that. But it is a terrible time at the moment, worst I've seen in 40 years of doing insurance anyway.
Yeah, one thing I would say is that what we have seen, I mean, I wouldn't disagree, with any of those things, but the devil, as I said at the end, the devil being in the detail. And what we have seen when we've on business we haven't held more so, and some that we do hold occasionally, is we have this. I think there's this tendency to think that if I just ask a lot of people, then that I'm going to get a solution. I.e., the more if I cover the market and get it to as many people as possible, I'm going to get a solution or going to get the answer I want. And that often is a bit of a hindrance to the situation. So I think always for me, it's about having one clear strategy to face a difficult situation, because if you have several brokers attacking the same markets, if you like, and it's a relatively small marketplace that we all work in, it tends to devalue what you're trying to achieve. So underwriters, it doesn't take much for them to not become interested in something, especially if the facts are there to behold, be it construction or compromised construction issues, or indeed claims, or all three. It's having a clear path to those insurers is absolutely vital, as well as the strength of the strategy involved.
Okay. Well, look, we're putting some more views up there, but I think now what we'll do, if we could, Abraham, let's go to the questions, because they are coming in now. We've got 9 or 10 now. So let's go to the anonymous one at the top. What are your thoughts on the government underwriting the PII market to increase professional capacity, recombustible cladding? Who'd like to pick that one up?
I don't mind picking that one up.
Okay.
Yeah, I think we've seen over the last few years the terrorism, we've seen flood re, all being picked up by the government. I think definitely with combustible cladding, I think this is something where the government should step in. We're almost at that point where we can't get insurance on cladding. I think it is time for pool cladding, really, to come in. I mean, insurers may want to to assist the government with some cover, but I think yes, unless something happens dramatically with the insurers, which I don't think it will, I think the government have got to start looking at it. And I think I know there are organisations within the construction sector already starting to gather momentum with petition against this from happening, really. So yeah, I think it is going to happen. It's just,
I suppose the only problem is the government have got their hands full at the moment, haven't they, with another big issue. So
yeah, they have a few issues at the moment.
I smile to myself when I hear on the news each day there are many organisations all saying the government needs to do more and give us more money. I just wonder where that money's coming from, to be honest. Anyway, can we move on, because the questions are coming in now. Yeah. So the next question then, please. Do we think the draft building safety bill will make PI insurance even more expensive? Greg, do you have a response to that?
Well, I'm no PI expert, but I think it certainly from my point of view is that clearly if there's action taken, that has an effect on the market. And as I said earlier, everything that we do is, and certainly from an insurance point of view, is risk reflective. So things that make the risks and the market better do get reflected. But I think it's a long road ahead at the moment due to the severity of the conditions. Okay, let's put the next one up then. Thank you. This is one that I've actually raised because it's a real hobby horse of mine. How can we ensure, I'm going to post this to Marcus, how can we ensure those companies with bona fide assurance schemes benefit from insurance payments versus those without? So those doing it properly, how can they benefit those versus who are not necessarily doing it properly?
Well, you know me, I like to differentiate from good to bad. So I think we need to tell insurers and show insurers the good guys, especially with certain trades within the construction industry that are leading the way, as to those that are just catching up. At the moment, I don't think there's much we can do because insurance and rates are just sky high, and I think everybody's going to be penalised. But long term, I think if we can get best practice companies on board through various schemes that we look at, whether it's Constructing Excellence, Structural Timber Association, whatever, and we start explaining to insurers. As you know, I get on my soapbox with insurance companies explaining the difference between certain members and non-members. So I think it's all about education and that usual piece of getting insurers around the table and saying these are a better class of client than others.
They don't seem to be listening at the moment, Marcus. Anyway, can we move on to the next
Andrew,
question?
yeah, exactly.
Why are insurers asking lots of questions about cladding and fire upon renewal only to fully exclude it? Is there any cover available at all?
Right, I can answer that one because I come across this quite a bit. So they're asking for the ins and outs of everything on cladding. I mentioned swimming pools and basements as well. Fire obviously is a hot topic, literally. The reason why they're asking for this is that when I present a client that's dealing with some sort of cladding, whether it's timber, whether it's brick slips or whatever, I try to differentiate that client from using a bad element to a good element. So I always ask for the more information because that's what Gallagher's do as a general. So if we can get any cover available, we need all the information that you can provide us to give us the best chance of getting you the deal. There is cover. It's an expensive cover at the moment, or you've got to take a huge excess on cladding. It will settle out as and when this crazy time subsides.
Okay, thank you. Just before I ask the next question, I just want to make a couple of points. We have had a question asked in the chat box about the presentations. They are always made available after the event. If you wait about 24 hours, they'll be available on both the Leaders Meets website and also the Constructing Excellence Southwest and Constructing Excellence Midlands website. So please wait about 24 hours rather, and they will be available. The other thing to say, I've just popped in the chat box the code for the CPD certificates today. So if you'd like a CPD certificate for what you've heard today, please would you go to the chat box and you can download there. Okay. Oh right, sorry, I've just had a note say Gallagher has not allowed us to share the slides for this one. Do apologize, sorry, I hadn't picked that one up. Right, can we go to the next question, please? Right, this is another question I've asked. How are we going to stop other building products and services being dragged into the cladding issue? Because what started off as a cladding issue now seems to affect everybody and everything. Marcus or Greg, who'd like to pick that one up?
I don't mind doing that one. I think this is all about the education again. I deal with a tranche of timber sector which has always had issues previously with insurance until we got to grips with it about 10 years ago, and we made insurers aware of the innovation and the mitigating circumstances that the timber sector put in. So I think to stop building products being dragged into this issue, we need to present to insurers the real facts drawn down on products such as, I don't know, insulation or light aluminium or whatever. We need to show insurers there that they've all got fire certificates, or they've all got accreditations to show that they're fire resistant. And until we can do that, we're not going to get further. I was on a podcast with a colleague in America and a colleague in Australia, and the way they look at the building sector, they have codes for certain types of construction methods. I think our country and the UK, we need to get either a passport type system or go down the same way to say, look, this type of material is up to BRE testing or BS this, that and the other. I think until we get to that level, we're going to have to just keep giving as much information to the insurers. And I know there are bigger ideas in process anyway behind this.
Okay, thanks very much. Right, we've got 5 minutes left. We've got 5 questions, so we need short, sharp answers now, chaps. I've just had an update as well from Leaders Meets to say that the webinar recording will be available on the leadersmeets.com website. the recording only, but the slides will not. So the recording is available, but the slides will not. Now, these have got to be quick answers, chaps, please. Do you think the hardening of the market in which premiums have risen up to sixfold will continue to rise year on year? If so, by how much?
I'll take that one.
Okay, great.
Yeah.
Quick answer.
Yeah, I think I would say it's all certainly in the completed built environment that I work in, it's about the remediation. So if something's compromised, it's not about premium rise, it's about maintaining cover. So that it might not rise, it might not be available, is the risk. And so therefore the remediation plan and acceptability of risk is paramount.
So is that a yes or a no?
If you've got a crystal ball, then I'll happily take it.
All right. Okay. Next question then. Are you still seeing clients asking for PII levels both on an each and every claim basis and at high levels without exclusion? Who wants to pick that one up?
Okay, so not one for you, no. So I'm starting to see clients, yes, they are still asking for any one occurrence, but it's just not available. We're seeing a lot more in the aggregate. I think that is the way forward. And I think the trouble is, the bigger the company is, the less likely you're going to get any one claim, unfortunately. There's just not capacity in the market, whether you've got 3 or 4 insurers on it. A lot of clients of mine now are starting to take higher excesses just to try and to get best deal. I mean, with some of the corporate sides, this may be something that self-insurance or captives may have to start considering, especially the major blue chip companies. But at the moment, I think you're not going to get each and every. It's going to be aggregate for a good couple of years yet.
Okay, thanks, Marcus. Just to say, ladies and gents, we've opened up the final survey poll. If you wouldn't mind just filling in the survey poll, telling us what you thought of today, giving us some thoughts for the future. Here's a question from a good friend of mine, Rob Knight. Has the time finally arrived for project-specific insurance, where quality, process, design, and teams are rewarded? Marcus.
Yes, I think we're getting closer to that on there. Certainly on the massive cases, you know, the big contracts that are out there. I've always been a fan of IPI. I've never been able to persuade insurers to take it on board as easily and accessible as some. Quality process, yes, that's got to happen. Design, it's got to happen. Basically, for this to work, we've got to get so much more early involvement. And I was talking to insurers about this a while ago. I think that's what we've got to do, is get insurers around that table, along with all the corporates and parties involved. I think it's getting there. It's definitely getting there. Ask me 5 years ago, say no, but now yes, I think we're getting to that stage.
Thanks very much, Marcus. I've got one statement to make, and this is an anonymous statement. Our design and construct recent PI increased by 5% due to our confirmation that no combustible materials will be used within the external fabric of the building. Now a question: with cladding, fire, and now asbestos, full exclusions on renewal proposals of companies facing claims that could close them down. Are companies facing claims that could close them down is the question. This is the final question, chaps. Who wants to pick this up?
Greg.
It's not really my area, to be honest with you. So I'll pass on that.
Okay, no, I don't. Okay, so one you can answer, Marcus. If not, don't be afraid to say no.
I think I think there is a time now where these are real becoming issues for companies trading, and I think it's a sad state of affairs at the moment with the insurance market. It certainly could go down that way, especially the smaller guys.
Okay. It is just coming up to 1 o'clock. So what I'm going to do now is I'm going to thank Marcus and Greg sincerely for giving up the last hour of your lives that you'll never get back. But thank you for your knowledge. Thank you for your time. We do appreciate it. Once again, ladies and gents, don't forget, if you want a CPD certificate for what you've heard today, www.mypropass.co.uk, and the code for today is CE-311. As always, I thank Howard and Abraham at Leaders Meets for hosting our Friday webinars. And just to let you know that next week we go into a completely different subject area. We're going to look at social media. We all know that social media is important, but I would hasten to say that many of us in the construction industry maybe don't do it as well as we could or we should, or understand the benefits that we can glean from using social media. So we've got a social media expert coming along next week to give us some tips and hints, particularly aimed at the construction sector. And then the week after, I'm delighted to say that Keith Waller, the director of the Construction Innovation Hub, is coming along to give us an update on their work. So another 2 great weeks to look forward to. But for now, ladies and gents, I'm going to say good afternoon and have a great weekend. Thank you. Bye-bye now.
Thanks.